All right, everybody, welcome back with another dose of economic reality, bull to the bust. Let's go ahead and get right into it, Bulls and Bears. We got a lot of news to get caught up on today. It's Sunday, August 25th, 2024, and things are really starting to approach a point where something is going to break. And I've always said here on this channel, I shouldn't say always, over the past at least a year and a half, I've been saying here that the second half of 2024 is going to be the time when it all falls apart. So we're approaching the end of August. Today's the 25th. Obviously, 5 more days will be into September. September represents actually the third trimester of the year, if you will, the last 4 months. And it's going to get even more interesting as we continue to go forward. A lot of crazy, insanity happened in July, in August. And I think we're just seeing the tip of the iceberg of what's to come. And it's not just me saying that. I think the reason we're seeing talks of rate cuts is because others in positions of power and decision making, as far as the engineers of this economy, I think they know that something big is right on the doorstep here, right? So let's go ahead and get into this here. Some news items I wanted to go over here. Fed chair indicates interest rate cuts ahead. The time has come to adjust policy. Now, I won't get too much into this article because a lot of it's things that we've been talking about here for a long time. But one of the things, and this is probably the key thing, is getting people to believe that inflation is under control and that everything's getting better, as if things are getting easier for most people, which just the opposite is true. People are getting further into debt. And just because inflation is slowing doesn't mean that it's getting easier. It means it's getting more difficult, but just less quickly as it was previously. So let me give you an example. I try to break this down because I still see confused people all over the place, especially out in public. Believe it on this channel, even on this channel, I still see confused people. Everything's fine. What are you talking about? This is doom and gloom. Why are you being so negative? It's not negativity. To me, it's just economic reality. But here's another way of trying to explain this economic situation, which is inflation. And remember, it's debt accumulation and spending that drives what they call economic growth. So as soon as people can no longer get into debt or go further into debt, that's when the economic growth illusion stops. And then economic reality is exposed. But here's another way of explaining, I think, this inflation thing. And remember, inflation is just a symptom of this endless spending, economic growth formula that they try to bring on, that they try to convince everybody of. Here's another way of explaining it. Inflation. Is it slowing? Sure, it's not as bad as it was. But think about this. Let's say someone eats too much, they have a bad diet, they don't exercise, they're gaining 10 pounds a year. So after 10 years, they've gained 100 pounds. They went from, let's say, being a 200-pound person to a 300-pound person. So the person's now 300 pounds, and it's not like a Shaquille O'Neal where they're really tall, so a lot of it's muscle. No, this is like a 5'7" person. It's 300 pounds, right? Not healthy, right? Unless it's all muscle, but no, this was not all muscle. This is someone gaining 10 pounds a year of non-muscle weight. So they're 300 pounds to 5'7". After 10 years, they say, okay, I better change my diet. Instead of eating 2 bags of chips a day, and instead of eating fast food 3 times a day, I'm going to eat 2 bags of chips a day and only eat fast food 2 times a day. So now instead of gaining 10 pounds a year, now they're only gaining 8 pounds a year. So the following year, instead of being 310 pounds, because they didn't gain 10 pounds, they only gained 8. So they went from 300 pounds to 308 pounds. So they're celebrating. They're saying, yes, the weight gain is cooling. Like inflation is cooling. The weight gain is cooling. I'm only 308 pounds. The old me would have been 310 pounds. This is amazing. Things are on the right path. We're on a great trajectory here. Things are getting better. Pretty soon I'm going to be able to see my abs. You see what I'm saying here, folks? Does this make sense to you? If it does, it's simple, right? Things are still getting worse, but just not as quickly with the whole weight gain situation as well. So there's still people that don't understand that. There's still people that think that I'm just making this up, that this is all wrong. And I know I shouldn't focus my time on just 1 or maybe 2% of the people, that watch these videos. But it's not just people that watch these videos. People on this channel that watch this, you, my audience, 99% of you, just based on the thumbs up ratio, 98 to 99% every video, you agree with me. The 1 or 2 thumbs down, 1 or 2 percenters, I think that's a very small percent, obviously. But if you look at society, not just people that watch this channel, but just the average Joe or Jane, it's like more than half the people don't even understand this. They're convinced that, well, we're being told the news said the economy's good, but look at my wallet, it doesn't feel good. Look at my credit card balances, it doesn't feel good to me. But I guess I must be just in the minority, because the news is telling us everything is getting better, things are cooling. But then we need rate cuts. Is that going to help? Is rate cuts going to help or hurt inflation? Let's see. Lower rates. People can borrow more money. People will have a slightly easier time handling their debt. Maybe they'll do a balance transfer and save a little bit on the interest rate. But is it going to help? No, it's going to actually make things worse. And, we're going to get into some other evidence here of all this here. Well, let's go ahead and move on here. I want to play a real quick clip here. We'll actually save that for a few minutes here. Take a look at this, though. And this has to do with food prices. Apple juice sold in Walmart across the U.S. recalled over arsenic levels. So are we about ready to see a big spike, and it's not just Walmart, a big spike in the cost of apple juice? And again, I have to ask the question, does anyone still think it's a good idea to have most of our food supply controlled by just a few mega companies? That's bad news, folks. Something else here. Inflation versus low prices. What gives? Inflation is low, but prices are still high. So we've got the Minnesota Star out there asking, how can this be? Prices are low, or inflation is low, because they're listening to what the Fed is telling us. But prices are still high. That's the whole weight gain thing, folks. You used to gain 10 pounds a year. Now it's 8 pounds. So the weight gain is slowing, but are you losing weight? Are you getting healthier? No, you're one step closer to something really bad happening from being very unhealthy. Right. Let's move on, though, to a sign of the economy. And this is rents. Now, for years, ever since 2020, we had these rent protections in place. And believe it or not, there's still some in place right now. And we're going to get to the scariest part of that here in just a couple minutes. But rents are now down. They're dropping year over year. And we just came off, some of the cities just came off of this just at the end of last year. But rents are actually down year over year. The median rent, let's bring it up here on a chart. And sorry, I almost forgot my glasses. I want to be able to see this with you guys. Down year over year. Now, we did see a huge spike, of course, the end of 2020, going to 21, 22. And we saw the first year over year decrease last summer. But here we are this summer now, lower than last year. So we're on the start of a downtrend. And keep in mind, this is still with rent protections in many, many different cities. So this tells you that people are reaching the end of their savings. Their savings has been depleted. People borrowing from their 401k balances in retirement. More emergency withdrawals from 401ks last year than ever before. And I think this year is on pace to beat that record. So people are getting tapped out. Not everybody. It's between 60, but closer to 70% of all people. And just declining rents is another, I think, piece of proof or evidence that this is actually happening, that people are getting tapped out. They're not getting more. They're not getting more money at the end of each month. They're actually less and less savings as we go along. If people were getting more money, they'd be able to afford higher rents, right? For the most part. But this is just something else that we'll have to keep an eye on here with the falling rents here. Here's one story, and there's millions of stories like this here. Bring this up here out of MoneyWise. We took a loan to pay off credit cards, and we maxed them out again. Couple drowns in $100,000 credit card debt because husband can't stop spending. Well, if you look at the spending, if you go through the article, a lot of it's needless spending or spending on wants instead of needs. But still, even if you cut that out, this couple would still be going further into debt. So a lot of people out there are doing this, and people are asking, how can people still go shop? How can still people have money at the end of the day because of the cost of living and wages not keeping up with the cost of living? Well, it's things like this. He's transferring his debt around, different loans, debt consolidation loans. Some people just transfer one balance from one credit card to another, and they kind of stay on this debt wheel. But ultimately, they're just getting further into debt. Most people, again, not all people, but close to 70%. Another story here. Mom moves into hotel room due to high rent. And that's always been kind of a head scratcher to me, because when you look at the cost of hotels, it's not cheaper than most rentals when you look at the daily rate. Now, some of these people may get monthly rates or special rates, and I'd really hate to see what type of hotel that this mom is living in, and she's living in it with her kids, by the way. Look at this here. Family living in a hotel, all right? Let's get into it. What type of hotel is she in? Month-to-month lease has always kept her on edge, and the persistent maintenance issues had further contributed to her stress. Now faced with a definite deadline to relocate, the uncertainty had escalated into a full-blown crisis. Desperate to find a new home, she started finding homes on Zillow, hoping to discover an affordable, suitable option for her family. 2-bedroom apartments were listed for $2,700, 3 bedrooms with $3,000 in Connecticut, and Connecticut's actually cheaper. I shouldn't say cheap. Connecticut is one of the cheaper states. Connecticut, which far exceeded her financial means. Compounding her distress, several of her applications were rejected due to her less than perfect credit score. She was defeated. As options became scarce, she came upon the Avon Old Farms Hotel. The hotel presented a 2-bedroom apartment on site for $2,200 a month, folks. A 1-bedroom apartment, $2,200 a month. Wow. She soon moved out of her home into the hotel, which offered her both comfort and amenities, folks. This is a really sad situation. Rent's coming down a little bit year over year, but when you look at the picture, it's really surprising actually that they went down when you look at all the new people coming here, and just the cost of everything, the cost of owning a hotel, the cost of owning a home. And if you own a home and rent it out, you know exactly what I'm talking about. The upkeep, the maintenance, the renter wants this fixed. They want that fixed. Right? I've been there. The maintenance costs are going up. The cost of not just materials, but the cost of what people, even somebody off Craigslist right now, they want enormous amounts to do work because they're suffering under inflation. I don't think a lot of people understand that. The people that are asking for these high dollar amounts to do jobs, they're not just doing it because they're greedy. They're doing it because they need to get by. They have to survive. And now we see, costs of maintenance skyrocketing. Here's another thing, insurance costs. And here's how the New York Times put it. Soaring insurance costs could end affordable housing, developers warn. Right? Another piece of the puzzle. Insurance costs. Insurance companies facing enormous losses because of the increase in extreme weather, the increase in medical costs. When somebody gets hurt, they file a claim. Car accidents, people get hurt at somebody's home. Somebody falls off of a roof. Medical costs skyrocketing. Labor, medical, materials, transportation, energy. All these costs lead companies to charge more. Now, some of it's greed. We've talked about greedflation here, and we've given examples of how companies are earning more profits, but yet they're saying it's inflation is why they're raising their prices. Well, we know part of it is greedflation, but the cost of living affects everyone. And when you're not a producer economy, you're a consumer economy like the U.S., most people are going to get hurt with this versus people that are actually going to do better. Investors bought 1 in 4 affordable homes. You want to talk about affordable housing, folks? This is one of the problems. Now, we've put the statistic out here many times about investors buying homes, how that's one of the pieces as to why home prices haven't fallen, why the housing bubble hasn't went bust. It's because so many investors out there. Typically, it's 1 in 6 when you look at the overall picture, which is a lot, 1 in 6. But if you just look at affordable homes in the lower price range that normally people would be entering as a starter home, 1 in 4 of those were bought up by investors. So there you go. So affordable housing, someone looking for a affordable starter home, that normally they might just be able to get into barely, scraping by the skin of their teeth. Even those now are being snapped up even more so. It's worse than 1 in 6. It's 1 in 4 when you look at the lower priced homes, or what's called affordable homes in this article, also known as starter homes. Somebody's first home, a couple's first home. So it's pretty sad, folks. 1 in 4 bought up by investors. So you want to fix the problem, there you go. All you have to do, well, not all you have to do. One of the big things you should do or could do to fix this is say homes are not for investing. All right. And you'll have some multifamily units that are always going to be only capable of being owned by some big institutions or big companies or big investors. But when you look at single family homes, folks, should it even be a profit industry, right? It should be, in my opinion, they should just change this, and they could do this at the stroke of a pen. They could change the law, right? Some people say no, it has to go through Congress. Other people say no. Look at what's called an executive order. If a leader really wants something done, they can do an executive order that overrides the entire legal process. Just look that up if you don't believe me. This could all be fixed, folks, at the stroke of a pen. And people scratch their head when I say that. That's how. All you have to, and that's not going to fix the entire problem. That's going to be huge. I would have to estimate that if you took investors away from single family homes, then I'd say we'd see at least a 50% price drops. It could even be more than that. All right. Then you have all the other things, the bank loaning out money they don't have, the reserve requirement being zero, and the whole thing that goes back to our system of money, fiat money. But just the investor situation, I'd say that would bring home prices down 50%. And then what happens when home prices go down by a lot when you see a crash? Rents come down right behind it because now more people can afford homes. That's more people moving out of rental housing. And by the way, if you took investors away from this, rental houses would pop up by tens of millions because they would be forced to sell. Right? So it's pretty interesting here when you look at it, but that's the price dynamic, folks, that we have to think about here. All right, let's close it out here. Here's something interesting. We always talk about the things that people spend their money on and how people, it still seems like they have money to burn. Here's something wild that I didn't know. This actually was put in the news several times over the past few years. And this is several people actually spending money on these little pods. Spending money on these little pods on the side of a mountain in Peru, and they actually sleep in these pods. Peru's Sacred Valley, transparent sleeping pods cling to the side of a cliff. And bring up a picture here. And there's people in these pods. Let's zoom in on these people. But here's the craziest part. These people have to climb the mountain to get to the pods. And they still have to pay $400 a night for these rooms. So you're climbing up the side of a mountain. Here's the little dinner pod. So I guess what it is, you go from the pod that you sleep in over to this other pod. And let's see if is it in the mountain? Is there a little hallway or tunnel, or do they have to go from one pod to the other? Look at this. So here's the sleeping pods over here. Sky Lodge Adventure Suites overlook Peru's Sacred Valley. All right, here's the people climbing up there. So these are all mountain climbers. Guests arrive at base camp and then climb and hike 1,200 foot up. So not only are you risking your life, right? I'm sure these people don't think they're risking their life. They think they're experts, that nothing can happen. Somebody brought their kid up there. Are you serious? Hang on. Wow. 4 cliff hanging capsules. Don't worry. Each capsule can hold 21 times the weight of an average adult. So if you're worried, there you go. Don't worry about it. Here's the inside of it here. Each sleeps up to 4 people, costs $400 per night. The views of the night sky are breathtaking, huh? I guess you can't look at the sky unless you're in a pod, right? Each capsule comes with a private bathroom. I hope so. And there's an on-site chef. Well, there you go. So they sold me right there. I'm going to go climb a mountain because there's a chef, and I'm going to sleep in one of these pods in Peru. Guests are served dinner at night and wake up to breakfast with one-of-a-kind view. Wow, that's pretty cool. There, let me go to that. So there you go. Would you want to have breakfast on the side of the mountain in a pod after climbing 1,200 feet and paying $400? So just something else, folks, that I think is pretty wild, the way people choose to spend their money. Just part of the deal that we like to talk about here, how people spend their money. Seems like people still have money to burn when you look at the big picture. When you go out, a lot of the malls are empty. A lot of the high-end stores are closing down. We have a lot of Nordstrom's closing. A lot of Macy's have closed. In my neck of the woods here, when you look at the news, it's nationwide. People are downgrading their spending, so to speak. More people now going to the Walmarts, the Dollar Trees. And that's what was so interesting out here in California when we saw the 99-cent store go out of business. That was a big place where people actually could afford to shop. And they go there and they had food. They had a frozen section. a refrigerated section, so it had a lot of food in there. So I was sad to see that go close. But just like what Big Lots is reporting right now, theft was a big part of it. And the 99-cent store said the same thing. And what is theft? What's the reason for the increase in theft? It's inflation, the cost of living, folks. You see, so cost of living, inflation, it doesn't do most people good. So a few people at the top, the investors, the bankers, yeah, it does them good. Because the bigger the loan, the more interest you're making on the loan. So yes, it does benefit some people, but if you look at most, it's hurting most people, folks. So hope you're in the top, let's say 30% that's actually benefiting from this. I'm not saying I'm in the 30%. If I am, I may not be there for long because I don't feel like I am. But anyways, hope you guys like this report. What do you think about the rate cuts? Things are getting better, even though you're gaining 8 pounds a year instead of 10 pounds. What do you think about that? That's just my latest way of trying to explain all this. And why don't people understand this? Why is this so difficult for a lot of people to understand? Please let me know down in the comments. I'll be glad to read your comments today. I'll have a little time and maybe we'll chat down there, everybody. Thanks for watching. As always, keep stacking. Bye for now. Peace.